Hi everyone, I've been with Turnkey for about 2 years now. I am usually the person you hear or see an email from in support. I do projects with everyone. So today we're going to talk about maintaining fixed assets. This is assuming you have the setups done in GP for your fixed assets. If you don't, we can always do a project or schedule another time to go over how to actually set up fixed assets. But this is talking about maintaining them, so adding assets, removing assets, retiring assets, and also the reporting factors. So our agenda today, we're going to start with adding them, and then we're going to go through retiring them. And some people do transferring between locations. Some people are just a single physical location, but there are entities that have more locations, and we can talk about why you would do transferring as opposed to just changing on the card. We're going to also talk about depreciating assets, performing the GL posting routine, posting to the general ledger, reports, and also there's another added layer. So some of our clients have MEM, which is a binary stream product. It's multi-entity management. It allows you to have, as opposed to 5 companies in GP, you have one single company, and then the facilities or the companies are within that one company. So I'm going to give you a little highlights of the MEM windows and how retiring and adding assets plays into it. So first, adding assets. There's 4 ways generally of adding assets. You can do a single transaction where you're just doing it without linking it to a purchasing transaction. You can add assets by linking it to a purchasing transaction, so it goes through a clearing account. There's also an import tool within GP that some people want to know about, and you run macros. It's a neat tool, but it does tie up your GP, so you can't work in it. And then there's also Integration Manager, which I love because you can just run it and not tie up GP, and it goes in the background. So first up, adding assets without linking them to a purchasing transaction or a clearing account. The minimum fields that you have to enter to save the card are your class ID, your asset ID, your description, your type, the property type, the acquisition date, and the quantity. Notice you don't have to do a cost. So if you just wanted to create the asset card and not put a cost in, you could do that and then come back and put the cost in. But generally, when you're adding the asset, you know how much it's going to be. And to find where this is in GP, you can go to the financial module and click on cards and then minimize the little financial. There's a little button. You see the little arrow right next to financial. You can minimize that up, and then you have your fixed assets. A lot of the modules have their own navigation panes within GP, such as purchasing, sales, but fixed assets lives within the financial module. So in order to do this, first you select your class ID. And generally in our setups, we have our class IDs set up with the account groups. Next is you enter the new asset ID, whether you have it default or you actually have, some people have an outside system where they are maintaining the asset numbers. The next is your description, which is limited to 40 characters, but you can go to the next line called the extended description and add additional information. Then it defaults to the property type or the type as new, but you can use leased or used are additional options. The next is the property type. That defaults to personal, but you can use residential and a couple of other options. Notice where it says account group ID, it has vehicles because I have my class ID as auto. And when we save this card, which you'll see on the next slide, that the vehicles account group ID disappears. And that's because when we go to the go-to, it assigns those GL accounts that was in that account group ID to the actual asset. Next, you enter the acquisition date. And when we get to the purchasing clearing, which is in a couple slides, you'll see where this date comes into play a little bit more. But this is generally your placed in service date. Next, you put in your acquisition cost, if you know it. And then at the very bottom, there's that auto add book info, which is fantastic because then you don't have to necessarily go into look at and add each, if you have more than one book, such as an internal and a financial or AMT or an ACE, this auto add book info automatically adds those books to that asset itself. Once you have that information entered, you click Save. What I always recommend is to review the accounts, the GL accounts, and the book cards to make sure everything flowed as you expected. And that is located at the top of the general card. And you can click on Go To and go to the account and the book. Or if you want, you can go to the cards and click on the book and the account. And this is what the account card looks like. So it has all the GL accounts that were assigned to it based on the class ID that I assigned to it. You can edit this individually and change the account if you want to. Next is the book. And the book ID, I have just one internal, but if you click that drop down, you can see ACE, AMT, any of the other books. And this tells you how much the cost is, how much your year-to-date would be, if you had any, if you had random depreciation. And it also gives you your original life and days. You can also add special or bonus depreciation if you want to. So if you're maintaining tax books and your tax accountants give you that bonus depreciation, you can go ahead and add it to the card. Now, adding assets that go to a clearing account. Notice that it looks a little different now, that there's a purchase at the top, and there's also a line that says purchases. When you use the clearing accounts, you enter on the invoice, so the payables invoice or the purchase order, you assign it to a clearing account. And when you post that transaction, it goes into that holding fixed asset clearing account. And then when you go to here to add the asset, you click the drop down where it says purchases. That's one option. If you know it's just one single asset. And it pulls in the information that you put on the purchase order or the invoice. And then entering the rest of the information is the same. It's just that little first part where you click on purchases and assign the invoice that you want to use. So when I do that, my little purchases up here went away because I had no additional invoices that had the clearing account associated with it. But it's the same process. You enter the class ID, you enter the new asset ID or allow it to default. You select a specific purchase, so you select the specific invoice, and then the description will pull over if you put on that payables invoice a description. So that second line, or when you get to that line where it says description on your payables invoice entry, it will pull that in here. And then the rest of the information defaults. So the acquisition date, it defaults to the invoice. If this was a CIP type situation or an asset that you purchased but you're not going to place in service until June 1st, then you can just change the acquisition date to, instead of be 4/12, you would change it to be 6/1. And then it pulls in your acquisition cost and then how many were listed. If you click on the blue expansion arrow where it says acquisition cost, this is that added layer that it does add to it if it was associated with a purchasing transaction. Notice at the bottom that it shows you the vendor ID and the purchase transaction associated with it. So if you clicked on, like everywhere in GP, you click on that hyperlink, it takes you to that source document. So if you clicked on that line and clicked on your voucher receipt number, it would take you to that payables transaction so you could review it. And the purchase button at the top, it allows you to group it. So this is that second step, or the second thing, that if you didn't want to select a single purchase to have as the asset, you could click on that purchase button at the very top and then group invoices together. So it could have been 2 payments or 2 invoices of $12,000 and $17,000, and then that total would be your total amount of the asset. So it allows you to do an additional, like, construction in progress. Obviously, you make several payments, several invoices throughout the year. And you could say the whole total is the 4 or 5 or however many invoices there are for that construction in progress. If you want to talk more about construction in progress, we would love to talk to you about it. It's a little more in depth. It's a little more involved than just creating the asset and going that route. But the next thing for adding assets, you can add a group of assets. So if you have it in Excel, it has to be, you can use the import tool within GP, but it does have to go through our specific template. And if you remove a column or change a heading, it's going to fail. So one of the disadvantages for using it, though, is that it does tie up your GP. So if you wanted to do this, well, you could run it and run it and run it all day, and then you can't do anything. Plus, you have to have all the columns listed in the import file. Even if they're blank, you still have to have them. And we do have the import templates. If you guys are interested or you want to talk more about it, we can provide those to you. But the neat thing is that you click on import, you create a macro location. So basically what it does is it runs an integration type of thing. So it runs a macro where it looks at your file, creates the steps that it needs to do and pull in, and then runs that macro after you click continue. The other thing that I usually use is Integration Manager. It doesn't, you don't have to be logged into GP to run it, and you can eliminate whatever columns you don't need. So instead of leaving the blank columns, you can eliminate the columns. Disadvantage, you have to install a couple of things. You have to install eConnect, and you have to know a little bit about Integration Manager and how to use it, but it is a very useful tool once you're taught how to use it. Any questions about adding assets? All right. Moving on to retiring assets. So retiring assets, unlike adding assets, which are located under cards, retiring assets are located under transactions. And you go to financial, transactions, fixed assets, and then retire. On this window, you would select your asset ID, enter a retirement date, the type of retirement, whether it's a sale, other, or like-kind exchange, whatever options are available. You enter the quantity. You can change the percentage. So if you didn't want to fully retire an asset, you could say you're only 50% retiring it. And then you can enter any proceeds or expenses. The next step is to click on retire. There is another tool called Mass Retire. So if you have a group of assets you want to retire and you know how to create an asset group ID, you can create that group and then mass retire them. It does help when you're taking it at the very end and there's a whole bunch of assets from 1983 and you want to retire them all. You just create an asset group based on the place and service date, and then choose it and then do a mass retire transaction. And then you can choose your spread options. So if you're just basically taking it out because it's fully depreciated, I would just say to use that first option, use this amount for each asset. So it just basically wipes everything out because it's fully retired. There is a nice tool called Retirement Undo that allows you to undo your boo-boo. So sometimes people incorrectly selected the asset, and other times they did a partial retirement and were like, it should have been a full retirement. So in order to do it, it has to be within your fiscal year. So the book has to be open in order for you to do it. We do have a back-end solution where we can help you reopen that asset book if you need to. But all you really have to do is click on the asset ID that you accidentally retired and then click undo. That was added back in 2013, I believe. So anyone prior to that was like, I don't know what to do, and you had to re-add the asset. Next is transferring assets. Now, some people just have a single location. And when I start talking about the MEM windows, it's a little different because you have an added feature that allows you to, instead of adding every single entity and facility in your physical locations, there's an extra window to the side. But for general people, transferring assets is a way for you to track when assets were moved from one building to the other building or one department to another department. So what you do is up here is my before, and what you're going to do is you select the asset ID you want to transfer. Again, there's a mass transfer if you wanted to do a group. But generally, if you want to do one asset at a time, you say when the transfer date occurred. And what you change is at the top, it defaults to, once I select that asset, it has my physical location as B2 R200. And well, actually it got moved to B1 R100. So at the very bottom, I selected the new location, and then I click transfer. And what it does is it gives you that audit trail. It allows you to see that the change was made and when it was made, and it flows in your what I call your fixed asset subledger. So it creates that transaction that you can actually monitor.
If you have different GL accounts associated with the different locations,
Mm-hmm.
if you were to perform the transfer here, will it also do a journal entry to move it in the financial module to the other account
Right.
when you do your FA interface?
Yes, so the question was asking about the GL side of it, and that's why you do it through here. Because if you did the asset card and you just said, I'm changing the location, it doesn't do anything, and you have to go in and physically change the card, change the GLs. Whereas this actually says, okay, well, we're moving from this location to that location and changes the GLs for you. Yep. Mm-hmm. Yes, you'll do your GL posting, and it'll show as a FAXR, I believe, or something like that, as your source document, so you can see that part of it. Depreciating assets. So this is a routine that everyone who has fixed assets does. And whether you want to maintain it in an Excel or you want to maintain it in GP, I love GP, obviously, but it allows you to maintain different books. So if you have AMT, you can create an AMT, you can create an internal, you can create a federal tax, a state tax, whatever you have. And it allows you, instead of maintaining that Excel report, it will give you your calculations like you would do anyway. There's a little rounding difference between that, but that's easily determined. It's usually a penny or two. But the depreciation process is that you go to financial, routines, fixed assets, and then depreciate. And from here, you either select a group of assets at the top, up here, or you just click on depreciate all assets. And then you enter your target date that you want it to go through. So whether you're just doing it monthly or if you're doing it yearly, depending on the number of assets, it may take a little bit. But if you do it monthly, it takes a lot less time. The next is to select the books you want to do. Some people do one book at a time. Some people do all the books at the time. It just depends on what your procedures are. The final step is to click on depreciate. And then when I get over to the MEM side to talk about those added items, MEM users won't be selecting the depreciate all assets. But I'll talk about that in a few minutes. So when you do the depreciate, at the very bottom, there's usually a little progress bar right here that turns green. Once it's done green, being green, it is completed. And then you close the window. Now, they've added this nice feature to allow you to easily reverse out depreciation. So, for example, you forgot to, or you need to rerun the depreciation for a month, or if you need to, when we talk about the GL posting part, people do the GL posting but then deleted the batch on the financial side. Well, either you recreate the journal entry or you can do the reverse depreciation to reverse it out and then rerun depreciation and post that batch. So it's the same concept where you select your group of assets or say depreciate all assets and then do your target dates, which should be usually a month prior or the year prior, kind of depends on when you did the boo-boo. And then you click depreciate and that reverses it out. So if you go back to your book card, you can see, okay, before doing the reverse, this is the amount, which if you're straight line, it should be $22, like for example. And then if you reverse it out, it would be the $11. So it would take the one away. All right. So first we add the assets, retire the assets, transfer the assets. The next step that some people forget to do is the GL posting routine. This is done under financial routines, fixed asset, and GL posting. what this does is think about your AR and your AP. They all have subledgers. And what this does is takes your fixed assets and puts it into a subledger for you. It doesn't post it through to the GL. It just creates a batch. So after we click process to build what we're going to post to our subledger, it's going to then say post. So the little button up here that says grayed out that says post, it will become available, and we click post. And then it will create a batch on the GL side to be posted. It can't post through. It's not available. You have to do that second step. The reason why you need to do that second step is sometimes when you add a whole group of assets, you don't need to post it because it's already reflected in your GL. So then you delete that batch because you don't really need it, because then your assets would double. Your GL counts would have the double amount. So to perform a GL posting routine, I do have a couple examples, but normally we let the batch ID default. Then we select a posting date, and this will be the date that posts to your fixed asset subledger, and will default as the posting date for your batch. So the next step is to enter a reference if you want, and then select your parameters. The parameters you have available are your period, which is 1/1/2018 through 1/31, or the whole year. Then source documents, which would be saying you just want FA ADD, which is fixed asset additions, or DEP, which is depreciation, or transfers, or any other changes. So after you've added your parameters, the next step is to click process. And then from there, you can either click print to actually review the batch, just like everything else you can do in GP, you can review batches. Then you can either save the transaction because you want to review it and then come back and either delete the batch and reprocess it, or you just go ahead and click post. So I have a couple examples where you ran depreciation for the whole year. Okay, so you said I ran it through 12/31/18, but I want it to be reflected in each month. So what you have to do is you have to post it. You have to do each batch all individually. So you have to insert the parameters as to what you want to do. So you do January as the first one, and then you put the period as 2018-001 to 2018-001. Then you post it. Then you do the next one, which is going to be February. So your posting date would be 2/28/18, and then your period would be 2018-002 through 2018-002. Now, the restriction I put on here, because I only wanted to post depreciation, I wanted to keep my additions and my transfers and retirement separate. So I put in the restriction of my source document is going to be FADEP, which is for depreciation. My next example, I said I wanted to do everything. So I want to include all my assets, additions, all my retirements, and my depreciation. So basically the same concept. I wanted to do it by month. And I just didn't do my source document, which will then pull in all the transactions that occurred. Any questions about the GL posting part of it? All right. The final step in the process is to post your batches to the general ledger, or delete them if you don't need them. So you go to Financial Transactions Batches, or you go to Series Post. And if you go to Series Post, which I do if I'm doing separate batches, so I did every month, I just want to post all of them to the GL. I just go ahead to go to Series Post and click on each individual batch that has the FATRX, and then post it. Any questions about posting to the general ledger? Again, if you delete it, you delete the batch from this step, it didn't actually post to your general ledger. And you either have to recreate it or reverse the depreciation. Obviously for additions or retirements and transfers, you can't reverse, or you can reverse some things, but you would just have to recreate the journal entry at that time. All right. Reporting. There's lots of options, just like everything you can do in GP, there's lots of ways to do reporting, which Sean will touch on some of the reporting aspects within GP. There are smart lists. Now, the canned smart lists, there's a fixed asset one, a book one, and then a purchase one. Each one can pull in a little bit of information each time, but we do create custom views and we have custom smart lists that pull in additional data and link tables together. SSRS, which are reporting services reports, SQL Services Reporting Services is what it was, right? And then it's now Reporting Services, which is a lot easier to say. These are web page reports that you can bookmark, and you don't have to get into GP, which is great, because you don't have to get in and take up a license just to run this report because you wanted to look at the additions or run a depreciation detail or run a retirements report or even a GL reconciliation. So the fixed asset to general ledger reconciliation report, which I recommend running, is it takes your subledger and compares it to your general ledger to see what was posted. And obviously, if you deleted a batch, you could say, oh, it posted to my subledger. That's why it's not posted, or that's why my GL is incorrect. And these reports, a lot of auditors love because you can easily export them to Excel. So you click the drop down to say save, and you save it to Excel as opposed to the canned GP ones where it's either a text document or something that's not easily changed or moved around in Excel. The canned GP reports, there's a lot of options. A lot of times we do take some of the canned ones and convert them over to SRS reports, so our reporting service reports. Just kind of depends on what your need is, whether it can be an Excel refreshable, or it needs to be a reporting service one, or it can be just be a smart list. So these are all the available options. Again, notice that there's the activity report, which is kind of available in Smart List. There's also fixed asset to general ledger listed here, but there's also that on the reporting service reports. You can also run depreciation detail, which gives you a little more options, but some of the options listed here, where it says by class, location, and structure, when you open up the web page, you do have the ability to sort and filter by those also. So even though it might not seem like it's available, it is usually a parameter you can select. So a lot of people use the fixed asset to general ledger reconciliation. They definitely use the depreciation detail and the depreciation ledger, usually by class. Some other ones they use are the additions and retirements and the transfers. You do have the ability to project. So if you didn't want to actually depreciate, you just wanted to project what your depreciation could be, you can perform that activity, and then you can run the report. All right. Any questions about general GP, adding assets, retiring, posting?
I wanted to ask, is with the new tax law,
Mhm.
you could spend any time on the ITC and like the bonus depreciation screen? Because right now I'm finding that you have to go out, like you have to add it to your tax RAMT and RAMT book, and then go wait because that little button isn't available until you add it. Then you got to go out there to edit that screen and stuff. I wasn't sure with the new tax law and all the stuff that's available.
Right. So yeah, so the new tax law regarding bonus depreciation and all that aspect, it's an added layer. They'll probably release an update for GP 2018 or beyond, probably not 2015, to kind of account for some of those things. But newer versions will streamline the process. I'll get you guys more information about that process and how it affects 2015, 2013, all the current versions. So you guys have more understanding about how it's going to impact you guys for that regard.
Yeah, and that would come out probably in the year-end
Yeah.
update. So like our payroll customers, they have to do a year-end update to update the payroll taxes. And sometimes when there's changes to forms and other tax schedules, it's included. So it's like a little service pack.
Yeah, usually,
At the end of the year.
like Diane said.
When you run,
Mhm.
then it's not going to be very useful. everybody for quarterly tax deposit.
Right. Usually with your tax accountants, you kind of work something out and say, these are my schedules, this is what I come up with, and they kind of give you some feedback back. So it's kind of a give and take usually between the tax accountants and the person or the main people. But like Diane was saying, that the service pack usually comes out towards the year end, and if there are form changes, like when there's changes to the 1099 forms and everything like that, it comes out in those service packs, and we do tell you or alert you for it. And it usually takes, depending on how many companies you have, usually a day or two just to shut everything down, run the service pack, update the server, and then we'll have to work with IT or work individually and update your machines with the service pack.
Yep.
Usually not a cumbersome process.
Yeah, and I was just going to throw in there, I know some other fixed asset softwares like Sage and stuff, they have the automatic tax updates kind of throughout the year, and GP doesn't. So GP's handling of it is a little more manual. And so sometimes people use GP's fixed assets for the internal depreciation, but then let the auditors kind of figure out the tax stuff because it is a little bit more of a manual process than
And usually
the other software.
a lot of people it's kind of why they take accounting jobs in a way. They kind of want to get out of that realm where they have to constantly stay up to date. I mean, it's great to stay up to date, but usually working with your auditors and tax accountants gets you to that point to determine what needs to be within your software itself. All right. Now, some of you, or a lot of you who don't have multi-entity management, this added layer of the ability to take 5 companies and put it into one. For the people that do have it, these are extra windows that happen on it. So on the asset addition, so on your general card to the side, especially in 2018, your entity extra is on the side where you select your facility or entity that you're assigning it, which is generally your company, the company that you're going to be using. So instead of maintaining all your physical locations and putting all these location IDs and everything in there, it eliminates that issue or that maintenance, that manual labor, and you can just select your facility and entity on the side. Now, asset transfer, this is pretty slick, where instead of, like I said, adding all your physical locations and location IDs, you just have to take what it says at the top where it says the from, and at the bottom of your entity, your extra window, is to put the new facility, the new department, the new company, whatever it is. And then in the background, it does your intercompany and everything on your GL side. The next is on your asset depreciation. Like I was saying before, you do not click depreciate all assets. It does create a new asset group ID every time you run depreciation. So it's a little maintenance you have to clean up. But if you're going to depreciate all your assets, you don't select depreciate all assets for all the entities. It gets a little confused. And it warns you. It says, if you want to do it, unmark your depreciate all assets for your facilities. So it kind of warns you. You can't do it. All right. And then on your GL posting, you do have to click on your facilities or your entities, whatever they are. And again, this does not post to your general ledger. So this is that first step that says I'm going to build my batch, I'm going to post it to my subledger, and then you have to do that final step of going to your batches and series post. All right. And then when you run I don't have the screenshots for mem reports, but with the mem reports, there's added layers of choosing facilities, saying I want to run one facility for this class ID. So it adds layers for the reports itself.